Hey guys, Anthony Special here with Special Analysis. Guys, if you like these videos, if you're getting value out of the content that I'm sharing with you, please below the video, like, subscribe. Please also feel free to share on your social media outlets. The more content I can deliver to you for free, the happier I am. Excuse the noise in the background. My English bulldog over there seems like he's having himself a good time. But we're going to jump right in. I want to look at the markets here. I want to talk about shorting the overall market. I know shorting the indices is sometimes not favorably looked upon, and I'm not saying it's a great idea, but I just want to show you the structure of what I'm looking at in case any of you are short, and the reference points that I'm seeing along the way here. So this is an ETF of the Qs, the QQQ, which tracks the NASDAQ indice. Typically, if I look to take a short position, what I'm going to look for is I'm going to look for the ETF that mimics the movement of the market, not necessarily short the market itself. So with that, I'm probably not even going to consider to short the ETF. I would consider buying call or put options. In this case, to short, I would buy put options simply because it's a good risk management tactic. And what does that mean? When you buy a put option, the most amount of money you can lose is the premium you paid for that put option. So, let's just say hypothetically the put option costs $5. I paid $500 for the put option. If this trade goes completely wrong and against me, the worst that can happen to me is I lose that premium. I lose that $500. So it is a way of risk control. So for those of you who may or may not be shorting the market in any fashion or sense, I wanted to just break down this video real quick, kind of show it to you. A, because I believe in extra volatile times like we're experiencing right now, the options market is your safer bet if you want to partake in this volatility. We want to control our risk. If we, expose ourselves too much, we can, of course, A, make mistakes, and B, it can become catastrophic. And that's not the idea. The idea is to live to trade another day. So I want to kind of show you how this all played out and the way I'm managing my stop as this trade kind of progresses here. So you can see the teal lines are heavily descending. What does that mean? That means that the channel structure that's built based on the price action that's currently occurring is and remains bearish. I mean, the market is still in a downtrend. We have not turned, meaning we have not confirmed a bottom just quite yet. So with that being said, I had indicated on a red line there about 335 where I thought, 334.15 where I thought was an ideal place. That if price settled below it, it would probably be an ideal place to consider shorting the market. And then I indicated an area of about $300 where I would like to buy back my position. So I would short from 334, excuse me, down to about 300. Now, how do you do this in an option? I would consider buying a 310 put option. Probably something that expires, we're in the beginning of March, probably look for something in June. And the reason I do that is I want the trade to transpire before I start to run into what's called theta. And theta is time decay. So I don't want my position to decay based on time. I want my position to transpire within a period of time that makes sense for me. So that would be my thought process on how to structure it. Now, how do I maintain it? So I'm going to place a line where I would likely put my stop. And as I entered the trade, I would likely put my stop right in here above this last swing high. So the close of this candle confirmed it, that price was likely to break lower. Here would be my stop, my last pivot high. I always want to move to the pivots. As this price action transpired, price obviously came back in, and then it tested the channel structure right here. And what did it do? It failed. So what does that tell me? Well, it confirms that the market is still in a downtrend, that nothing has changed to make me believe the market's going to go higher. So what am I going to do? I'm going to now move my stop right here above this last swing high. So you can see as the trade continues to transpire and the market continues to impulse correct, impulse correct, impulse correct, I'm going to move my stop just a hair above those last corrections. And I'll continue to do that until one of two things happens. Either the stop is built into the profit of the trade, or the trade has hit my target and I've been, the position's been closed. So it's one or the other. So again, my thought process is, a good close below this previous low here, 334, likely going to push us down to this next area of support here. You can see this black line. This is an old channel top dating back as an extension off of a structure built way back in 2015, so it's likely a relatively strong place to hold. As we dial in, we can certainly see that as price has tested this descending channel top, that it continues to hold and price continues to get pushed down. So of course now we want to see a close below this low, like we were looking for a close below that low to see that continuation. Market's been very, very choppy. This is the volatility we're dealing with. But if you want some downside exposure, this, in my opinion, would likely be the safest way to profit from the downside. Buy put options, based on the ETFs of the overall indices. And if we get this push continue down, we're going to continue to manage the stop as we can get it to come lower and lower and lower. And then we're going to look to try to get this target. Is this the next pivot high and then price sinks from here? I have no idea. But as of right now, this is where I'd have my stop right at about 350 above this candle here. This candle high is 350.04, so I probably have my stop placed at about 350 half or 351. So this is the way I would be shorting the market if that is the way, if you're interested in shorting the market. This is a strategy that of course uses trade management and keeps safety in mind. So I want to share this with you guys today. Among all this volatility, there is opportunity if you have the guts and the know-how to get in and take advantage of it. Now again, if you like this video, if you like this content, if you like the things I'm sharing, please, below this video, like it, share it, subscribe to it. It's more than my pleasure to provide all this information for free. I hope you'd visit me at my website at anthonyspecial.com, or of course you can visit me at Traders Agency and see the fun products and research things that we put out there for all styles of traders. So I wish you a beautiful and blessed day. I hope you're having a great week, and we will talk to you soon.